Bankers of Nigeria and the Chartered Institute of Taxation of Nigeria. He has a PhD in computer science and a BSc accounting and MSc computer science from the University of Lagos. He joined the Nigerian Exchange in 1997 and has served meritoriously in various capacities, including in his current role, which he started as a pioneer head of the Market Surveillance and Investigations Department. And this is a department, that ensures protection of market integrity and investors. Without further ado, so I'd like to call on Mr. Babalola. You have the floor, sir. Thank you.
Thank you very much. Let me share my screen. Good morning, all. You are welcome to this morning presentation. And the topic I'll be discussing this morning is an overview of the capital market. To achieve that, I will be focusing on, talking about the overview itself, letting us know the products and services that are available in the capital market, the benefits that is associated with one participating in that, and also give you a bit of insight as to what and how one can invest in the market, and also give you a bit of, caution as to what you need to look out for when you're doing that. So when you look at every financial market or every economy is supposed to have a financial market, and that financial market or the financial system itself can be divided into the money market and also the capital market. And what literally basic thing that differentiate these two markets, people say, is just the tenure of the instrument that you are investing in. But let's look at just differentiate this in terms of money market and capital market. In the money market, the apex regulatory body there is the Central Bank of Nigeria that had its own responsibility of stabilizing the price by making sure that inflation is well controlled, and also setting all the necessary money market, using money market instrument, the open market instrument to control this. In that market, we have other participants, the banks, the discount houses, you understand? And what are the things that people invest in that space? You talk about bonds, you talk about commercial papers, and you also talk about treasury bills. And who are the people that participate in these? You have government themselves, participating, corporate issuers, institutions, institutional investors, and individual investors participate in this. And you also have the professionals that have been licensed to actually carry out that investment advice to their clients. On the capital market side, we have the Securities and Exchange Commission, SEC, who is the apex regulatory body. They are the one that license all the capital market participants. You understand, whether you are operating a security exchange, or what we call stock exchange, you're going to be regulated by SEC, or you are doing an OTC market. In terms of instruments that are traded there, they are for long term. You have equities, you have bonds, you have ETFs, which is called exchange traded funds, and you also have derivatives. So on that other side too, in terms of participants, we have the government, corporate issuers, individual investors and institutional investors, and you also have licensed professionals who also participate in that. Now, like I said, because government needs, or the economy needs, long-term funds for developmental purposes, that is why the role of the capital market. Government, is on the demand side of the capital market. Government needs funds. They need to embark on developmental projects, so they need a long-term funds. So they also use the market. On the demand side again of the capital market is where you have corporate companies who wants to borrow money to embark on developmental projects. And if government and corporate keep getting this money in an efficient manner, that will lead to more jobs being created, eliminating or reducing unemployment, and that will cascade into good standard of living for the citizens. So this market is there. That is speaking to the primary market where capital are being raised. The secondary market aspect of it is where existing instruments are now being traded. That provides liquidity for people who subscribe to the primary market, because our investment plan differs. Let's assume that I want to invest money to fund my children's education. You understand? Especially their tertiary education. Now they are in secondary school. I keep investing. A time will come, as soon as they start gaining admission, I want to realize that investment and use it for the purpose for which I set it aside. So that is where you need the secondary market to provide liquidity and encourage people to do that. And like I said, if you have an effective and efficient capital market, what that does is that companies and government are able to raise money in an effective and cost-effective manner. Investors too are having good return on their investment. That will oil the engine of growth in that particular economy. So this also explains to us physically, majorly, what happens in the financial system or in the financial market, where you have financial market intermediaries, systems, technology, rules, everything interplaying together. But this instrument, this thing, is purposely doing one thing, that is mobilizing funds from the surplus end of the economy to the deficit end of the economy, so that they can embark on economic and developmental projects that will benefit a lot of people. That is why you see all the good work that Lagos State government is doing. You will see that they come to the capital market, they raise money. The time it was when our local government was very, very effective. The popular Shura market that we all know today, was actually built during Prince Adeniji Adele, when he was the local government chairman of Lagos Island. So local government themselves can come, raise money in the capital market and use to embark on developmental purpose. Now, before I'll go back to more to talk more about the instrument there, but let me quickly speak to the stakeholders in that, and I'm going to go through this quickly, especially in the capital market. So you have the Federal Ministry of Finance there, being the ministry that supervises SEC, you understand, and they are responsible for the fiscal policy of government in terms of taxation, in terms of many things. And today you will have noticed something, that we now have a Finance Act that we are issuing. This week, Mr. President went before the National Assembly to lay his budget. The next thing you will see is that as soon as that budget is being approved, a fiscal decision is taking place in terms of what we call the Financial Act 2020. 2022 will also be issued. These are things that guides and gives direction to what government will be doing in the next 1 year. Now, next to that is what we call the Security and Exchange Commission, which I've explained. Then you have the exchanges, which are like the market, and they are the SRO. They provide the trading platform upon which people can trade. Then you have the issuers, which are the companies and government that comes to use the capital market for a capital raise, you understand? Whereas the secondary market also provide activity in the secondary market for existing issues. Then you have this the clearing house, the security and the central security clearing system that provide clearing function for all the trades that takes place on the floor of the exchange. Then, next to those people will be the registrars who keep custody of records of existing shareholders, so that every time the company is making corporate action, paying dividend, having need to invite people for AGM, you understand, it is with the help of the registrars that they do that. Then you have many professionals there, but the one I want to quickly mention is broker-dealers, which we call trading license holders today. They are the professionals that have been licensed to assist investors in buying and selling of investment products. Then we have the trustees and custodians that also render their functions. We have solicitors, reporting accountant, but key, most important participant, investors, you understand? Whether you want to classify them as local investors, institutional investors, domestic investors, investors are key, and it is the reason why we are in market, why we are in business, to provide investment vehicle for the investors so that they can achieve their investment objective. Now, this is just looking at, doing a bit of comparison, because when you say a capital market, the next thing you want to ask yourself is, what are the products that are being sold there? What are the things that I can use there? So you will see that we try as much as possible to look at other frontier markets and see what are the products that they offer that we don't offer now. So you see that, almost every market that we sampled, offer shares, or what you call equities, whether it is common shares or common equities, or whether it is preference shares. They offer those class of shares. Bonds, almost all of them offer it, except Kuwait. And these bonds comes in various forms. Apart from the traditional bonds that we know, people have started doing same, especially into sustainability. We've talked about green bonds, that is capital raise that is focused on environmental friendly projects. Today, people are talking about blue bond that has got to do with aquatic and something that has got to do with ocean. So a lot of effort, in fact, finance is going into everything. We're now integrating finance with environment. We're integrating finance with, in fact, today, carbonization, reduction of carbon is something that has now become a financial product. So finance is covering everything and is speaking more into sustainability and doing everything. But today, people talk about ethical investing. So there are a lot of things that are happening. And like I said, the bond, government raising bonds and specifically targeting, a particular thing that leads to sustainability, that leads to pollution of the environment. All these things are gaining traction, and their portfolio size is also increasing. Exchange traded fund is also something that is done under collective investment scheme, where people pool resources together and they invest as a group. So whether you talk about mutual funds, whether you talk about unit trust, whether you talk about exchange traded products or exchange traded funds, they fall into this category. Although, like you will notice, most markets don't deal with foreign exchange, because that is under the purview of the central banks and the rest. Then we have what we call REITs, that is real estate investment trust. Again, we all know the challenge. Everybody wants to own a house, but you don't necessarily have to go and buy land and build a building before you can benefit from the investment opportunity that is available in the real estate market. You can actually buy into a REIT. REIT is also a form through which people pool resources together and they invest in real estate. So you buying a unit of that also expose you to the benefit that can accrue to you from real estate. Then we have other, like I said, other CIS mean collective investment scheme, structured products which are deliberately aimed at solving a particular problem or taking care of a particular or a unique thing. We have warrants, and the last one, which is derivatives, is something that we're about introducing into the market. And what that will do is that it's going to liberalize and democratize the market. What do I mean by that? It means that for you to have an exposure to a particular instrument, you don't necessarily have to drop 100% of that money again. So take, for instance, now, Nestle Food, that the average price for today is 1,500 Naira. If I want to buy Nestle Food, then I'll have to look for 1,500 Naira with a derivative. You understand? It might just be that all what I need to pay as premium, you understand, whether I'm buying a call or I'm doing a put, might just be a fractional amount of that. Then I'll also have that same exposure to Nestle Food. So that gives an opportunity. Today in our market, I cannot sell what I don't have, meaning short selling is not allowed. But with the derivatives, I can still take a position that appears as if I'm selling, or whatever I perceive to be the benefit that will accrue to me. If the share price of that company is going down, I can still achieve the same using a derivative. A derivative derives its value from under an underlying asset. And hopefully, all things being equal, you will see that product being launched in our market, hopefully before the end of this year. Again, this is just telling you, that the Nigerian Stock Exchange is a sustainable exchange. You understand? We are now, NGX, is a sustainable exchange. We focus on growth. We try to power the economy. And this is just showing you the classes of what we have listed, the number of listed companies, the different boards that we run, you understand? And also the different kind of instruments that are traded on our floor. Now, we've talked about products. People don't just invest in products. They are looking for returns, So this is also a way of demonstrating. But every time you invest your money, whether in a business or whether in any investment, you are exposing that investment, that capital, to risk. So here we try to demonstrate that if you're waiting for return, you must also know the potential risks that you are exposed to. So in terms of cash, why cash has limited return, it also has limited risk. That is why you see people wanting to put their money in savings account. But let me say this here, you are not optimizing your return if you are looking for, return, because today people are still, I'm still struggling to come to the terms why several trillions of naira will be sitting in savings account, wherein, probably the return you are being given is less than 1%. But whereas there are federal savings bonds that people can buy into that gives you even greater assurance, because they are instrument that is being issued by the Federal Republic of Nigeria, which is backed up by the taxing power of the government. Some of these are given 7%, 8%. So please, because in terms of risk, the same, in fact, it's a lot risk. I mean, the risk is more if I put my money in a deposit than if I put it in a savings bond. So I will make more money. So meaning the risk of putting my money in a federal savings bond is minimal and the return is higher. So anytime you find yourself in a situation where your risk is lower and the return is higher, that is the kind of instrument you should look for. And federal government bonds, like we said, they are next in that cadre. They give you higher return and the risk is reduced compared to other things. And we have what we call the high yield fixed income. These are fixed income that, gradually you've moved away from government. You understand? You started moving into corporate. Then you expect that, the return might be higher, but the associated risk is also higher. Then large companies, that is, if you want to invest, we always advise you invest your money in blue chip companies. Yes, they give you higher return, but the risk associated to that is not as much as you investing in penny stocks or stocks that have not matured, because something can happen. But the greatest of all risk in terms of structures and instruments that are used in investing is venture capital, because venture capital, you are just financing a new idea, an idea that the only thing is, people have accepted it. Then because these guys, they also have the highest return, but also they have a very big risk that is associated with that. Now, in terms of, again, one of the things we advise people in the capital market is, always do your return and risk analysis from a portfolio point of view, not from individual stock point of view. That is, if I want to select a stock and include it, or I want to select any financial instrument and I want to include it, you must look at that financial instrument vis-a-vis the impact of it on your return or the impact of it on your risk. Don't look at instrument in isolation. So here we try to say the way people now approach the market is to come from a portfolio point of view as opposed to coming from an individual point of view. And we try to look at, buckets or classify this investment. Some have what we call conservative investment portfolio. That is where you see them do 65% of bonds and 35% of equities. Then some would do a moderate, where you have, they swap it. You understand? Here you have 65 bonds, 35 equities. Here you are having 65 equities and 35 bonds. Then when you talk about aggressive, they just do 100% equities. Now, let me also say this. This asset class, or what we're saying, they are not limited to Nigerian capital market. Capital market or the financial market has been fully integrated. So it doesn't mean, you understand, when I'm distributing what I'm distributing, I might have equities, Nigerian equities, African equities, and international equities. I have that freedom to just, what I would do is to make sure that I have my risk and everything well profiled. You understand? Today, as much as we talk, people still have exposure to other international market, other products By the time derivatives comes, I can use derivative to manage my risk, you understand, to minimize my risk, and then to optimize my return. So this is talk about, like I said, I mentioned sustainability investment style. They are popular now, and they are also giving a very good, return, because people started paying attention to what is your impact on the economy. Some of them are graduated to become an ethical investment, where people will tell you, I will specifically put my money into some set of securities, in as much as they are not doing something. You can talk about carbon footprint. People will tell you, I will not, if you're emitting too much carbon into the environment, their view is that you are impacting the environment negatively. That is why you are making money. Some will tell you, I will not invest my money in any companies that manufacture weapons. You understand? So all these kind of things has made investing to take different styles, and you should watch out for that. If you look at our indices, it's also a reflection of some of this style. Are you focusing on corporate governance? You have a style. Are you focusing on growth? You have a style. Are you going, so whatever you are focusing on, you will definitely see that product, you understand, that people have created with the hope of attracting people. And I think I did mention this, that when a company is raising money, we call that primary market. By the time they finish raising the money, what they now do is to go to the secondary market. So the major difference between primary market and secondary market is that primary market, the fund that is raised there goes to the issuer. So if it is a company that is raising money, the money that is raised goes to the company. But in secondary market, the money moves between the buyer and the seller, because if I'm the one selling my investment, the buyer will pay me, and I will give the buyer the instrument that I'm selling. So these two markets, they work together, and they support each other, because you cannot have a thriving primary market without an efficient and effective secondary market. So they are together and they support each other. So this still speaks to what I've mentioned about issuers, investors. So if we look at the demand side, that is where you have the issuer, and if you look at the supply side, that is why you have investors. Now, one of the things that is also very, very good for us to know, as somebody who wants to know what the capital market is, this need for company to be listed, a lot of benefits are there if a company is listed. One of them is that one, as a listed company, you have access to growth enabling capital, and some of these things are cheap. You can raise money. Some people are raising billions of naira. You come to the market, you raise it. That capital is available for you. You also have options, because some people today, they have a fantastic business idea. Everything is going for them. Funding is a major problem. And if you don't have the appropriate funding, what will you do? Most of them runs into borrowing from banks that are supposed to be doing short-term loan to finance a long-term business. And once that financing option is not properly addressed, then you see a company that is supposed to be profitable having issues, you understand? But once you are a listed company, as a listed company, even when you need funds, you can even use your shares to buy other people's assets under merger and acquisition. If I'm a company A and I want to expand, I can speak to the shareholders of company B that I want to take over by giving them the options that I can use my shares. So you will become a shareholder in my bigger company, and you can use that. You have many things. Again, some of these the long-term financing options that you have, they also come at competitive rates. You understand? Rates that you cannot see anywhere. You understand? Now, by the time you are listed, one, it makes it to be visible. Like all of us know, there's no time that they are casting news, you understand, or reporting what is happening in Nigeria or in an economy that you don't see, companies' name being mentioned. And that comes to that company as free advertisement, visibility. Today, if the internationals wants to do anything with you, once you say you are a listed company, that gives you an added advantage. It makes it to be more transparent, because there is a code of conduct. Everybody wants to be doing what you're supposed to be doing things right. Your shareholders are on you. The regulators are monitoring. It makes you to operate in a transparent, and it also builds your integrity. Then that will also enhance your share valuation and liquidity again. Today, again, I know of many people who will tell you that, look, I am an expert, I have quality human capital, but I will only give that service to a company that is listed, because I know, for a company to be listed, they operate under a certain regulation. You understand? Again, if you want a sustainable a business to continue, the best thing for you is to get those companies listed. Go and check. Today, people are celebrating companies that have spent over 100 years. You understand? Majority of those companies are companies that are listed on an exchange, because with that, that company will continue to survive. It can outlive the owners of those companies. Today, many of us have forgotten when they say PZ. PZ is actually Patanizokoni, two names of two friends. You understand? Today, majority of us have forgotten that Nestle is actually somebody's name. Cadbury is somebody's name. Cadbury is somebody's name. So tomorrow, a time will come when they mention Dangote, people will have forgotten that Dangote is actually somebody's name, because if that company continues to be listed on an exchange, it can be there for as long as the company is doing what it's supposed to do and it's meeting its investors' requirements. So in terms of the capital market again, and I've mentioned boards. So I also want you to know that the capital market is not for big companies alone. It also gives room for big company, medium company, and even startups. You understand? That is why we have different boards with different requirements. So again, I'm trying to analyze the capital raise that was done in 2020. We discovered that we have 25 participants, both company and corporate. In terms of debt, this debt constituted about 64% of the capital raise that was raised last year, while equity is only 36%. And also, in terms of one of the things, when you invest in the capital market, let me quickly talk about that. If you invest in the capital market, if you invest in fixed income, what you will get is interest coupon that is based on the regular or whatever has been agreed. But if you invest in shares, equities, one, when a company is doing well, you are entitled to, and the directors deem it fit, they can declare dividend. You are equally entitled to your own share of that dividend. Number two thing that you also stand to gain and benefit is what we call capital appreciation. That is, if I buy shares at 10 naira and the company is doing well, is moving up, at the point I want to sell, I might be selling it for 15 naira or for 20 naira. That is capital appreciation. Another thing that is very, very common in this part of the world is bonus, where they give you extra shares that you don't pay for, thereby increasing the number of shares that you have. All these things are benefits. And, because when you buy equities, you're also participating in what we call corporate democracy. It means that as a shareholder of the company, I have the right to attend AGM. I have the right to speak at the AGM. I have the right to vote and also to be voted for. So you are participating in corporate governance. Another thing about shares is this. It also has a benefit that I can sell a fraction of my shares. So if I have 10,000 shares, I can sell 1,000 if I have a need for it. And I can also increase my holdings in the company. You understand? Then I can use my shares as collateral for loan. And if anything happens to me, with ease, I can transfer my shares to my estate. These are some of the benefits. So when looking at dividend last year, you understand, about 877 billion, was paid as dividend, and 29% of that came from financial sector, while 71% came from non-commercial sector. Now, speaking about that, so I've mentioned dividend, I've mentioned the amount of dividend that was paid. Now, let's look at what happened last year. What happened last year in the in Nigerian capital market, or let me say Nigerian equity market? If you follow the market closely last year, you will discover that at the beginning of the year, the price of crude oil went negative. And what happened? Our stock market declined. Why this happened? Then COVID became a problem in Nigeria, and Nigeria started shutting down. Then the index went down by 23%. Now, at the close of the first quarter of 2020, that was what happened. By the second quarter, the index picked up. And by the close of business, compared to what it started with, the market appreciated by 42.42%. Meaning if anybody had invested during the market on the 6th of April last year and hold till the end, on the average, that person will have had this return. And you can see, because of that, something happened in the market. What happened was that the market returned a capital appreciation of over 50%, and the Nigerian equity market was judged as being the best in terms of return all over the world for the year 2020. Now, these things are important, you understand? Now, this is it. Most investors in the market, I've listened to people, and what I always tell them is that, please, you need to have the right kind of education. And when you have the right kind of education, you will be able to maximize your profit in the market. You will be able to, I will attend to all the comments and questions. You will be able to quickly appreciate the market. Any financial market, your analysis are in three forms. You have the fundamental analysis that speaks to the fundamentals of that particular company, the fundamentals of the economy, and the fundamentals of things that happen around that. The next thing is what we call technical analysis. Technical analysis is where you are focusing on price and you are looking at the direction of price. You are paying attention to the open, high, low, and close of the market. Which companies are attaining new high, which companies are attaining new lows. Then you don't leave out what we call sentimental analysis. Sentimental analysis is what is going on in the economy generally, irrespective of what is going on in the particular company in which you are operating. That is why for you to start investing in any company, especially I'm focusing on equities now. If you want to invest in a company, it is expected of you to know the fundamentals of that company. Which product are they rendering? Which services are they rendering? What is their product mix? What is the driving factors of that particular sector, of that particular industry, locally and internationally? Is your company a leading or a leader in that industry? What are those things? Where did they source for their raw materials? Are you with me? Did they source for them locally? Did they source for them internationally? You must also pay attention to what is happening to interest rates. You must pay attention to what is happening to inflation. All these assist you before you now narrow it down to your company. The reason is this, so that when things are changing, you will know where to invest your money. Let me say this, and it has been proven. Today, anytime crude oil price is rising in the international market, Nigeria's equity will start rising. Please go and verify. In the last 2 weeks, the price of crude oil has been rising. Go and check what is happening to Nigerian equity market. The Nigerian equity market too has started rising because the price of crude oil is our main source of forex. And the more prices of crude oil is going up in the international market, the more the investors will perceive that the Nigerian economy is the possibility of it becoming stronger is there. And also, when things like that happen, the reverse happen. Again, and I can tell you this again, in 2016, when Nigerian economy went into recession, you will notice few things happen. One, when Nigerian economy, the performance of the economy should also guide you when you are taking your investment decision. In 2016, when Nigerian economy went into recession, if I want to invest, I will have looked at companies that are exporting their product out. That is, they earn forex. And two companies comes to mind that you can also confirm: Presco and Okomu Oil. Because these guys are producing palm oil and they are exporting it. Go and look at what happened to those two companies in that year. And you will notice one thing again. 2016, Nigerian economy went into recession. We came out of it in 2017. Equity market returned the highest in terms of the third best return for that year. In 2020, we went into recession. We came out of it. No, in 2020, we went into recession. We came out of it. What happens to the equity market? The equity market returned the highest in the world. This is a pointer to one thing. A pointer to the fact that if you do your analysis very well, if you do your research very well, you will be able to optimize, and you know so much about your company. Because if you invest in a company, you are a co-owner of that company. You must know everything that drives that company. Look at this now. I will just use this. This is just showing that 2021 to date. If I'm looking at this, this is just telling me in terms of gainer side and in terms of loser side, that Morrison moved from 49 kobo and is presently trading at 203, meaning a company in our market has returned over 300% like this. But the question is, the mistake most of us make. Let me tell you the simple principles of investing. One, when you want to buy, you must buy at discount. You must buy at discount. But most of us, most times, what do? We buy at premium. Somebody will come here now and say, oh, Morrison is rising. That is when he wants to buy. You are buying at premium. The people that can benefit from Morrison are people that bought when it was less than ₦1, when it was 49 kobo. Those ones bought at discount. Now, when you are selling, you sell at premium. You buy at discount and you sell at premium. But we do the opposite because we always wait for people to say it is happening. Then the fear of me not missing out, so you now rushing and you are buying at premium. No, you buy at discount and you sell at premium. What do I mean by that? Look at this side of loser side. So if I want to invest my money now, I will look at the gainer side. I will want to pay more attention to the loser side. Which company is shedding weight? And why is it dropping? Is it dropping to give me an opportunity for me to buy at discount? So I will pay more attention on the loser side, and I will have to start analyzing why are they losing? If it is something that is fundamental, that is the reason why they are losing, and I want to take my hands off it. But what I'm saying is that when we're doing our analysis, let's pay attention to all these things. You understand? Like now, look at it. A month, about, let's say this period is for school fees. A lot of pressure will be on the household to pay and return their children to school. That also has impacts on the market. But again, there's something that is also happening. The price of crude oil is rising. Crisis in the energy sector throughout the whole world. That is also impacting on Nigeria. So you pay attention to all these things. They have their importance. They also contribute to what you see. And read more of research people, and read data. Ask questions, you understand? And that will help you, in your analysis and in selecting, investments to invest in. So in concluding, I'm saying, yes, a lot of things are outside there. A lot of things are saying, trying to attract you to invest your money in there. But please, I need to give you a bit of warning. You understand? When you see that something is true, there's poor documentation, you cannot speak to an investment thing, or somebody wants to give you an investment idea and he cannot explain it within 2 or 3 minutes, then I want you to be careful. When you discover that the product that they are offering you is not registered, with the regulator, you now know the regulator, you understand? You can ask that question. Are you registered with SEC? Are you registered with central bank before you start parting with your money? Don't involve yourself in unregistered, with an unregistered or unlicensed financial professional. Because if anything happens, you understand, you call on the regulator, it will be extremely difficult for them to support you. Don't forget, in the capital market, the reason why we have people being licensed, professional being licensed, is because so that the regulator can ensure that they are doing the right thing. And that is why, I had the market surveillance and investigation. I know what we're doing and what we have done. In fact, 2019, we recovered about 1.65 billion for Nigerians who ordinarily wouldn't have known that they have or their parents have such an investment. Last year, we did the same thing, even despite the period of COVID. We recovered about 1.45 billion for people. So we do that, but we can only do that if you participate people that are under our own license. You know, if somebody is not under my license, you know, the next thing you will have option is to go through the law enforcement agent. But that is why we say, please. And when you see if somebody is selling a product to you and is telling you, you know, returns that are, that are too, you know, you could doubt it. Somebody asks you to bring 1 million and is telling you, I'll be paying you 25% almost every month. You should know that that is not true. You understand? Because are we not investing in where is that person investing in? Which product is he investing in? Is it a product that is outside of this world? You understand? So you need to be careful. Then when people start soliciting for investment from you, you also need to be careful. But like I said this, and I must tell you, my view is that the best way to protect an investor is to educate that investor. Please, before you start patronizing any product, before you invest even in a company, know that company, know their business. Take your time, you know, read about the people that are running that business. Take your time to attend AGM. Take your time to visit the office and see the countenance of the people that are working there. All these things are critical and they are very, very key when you are investing. So again, you know, like I said, you know, even if you want to invest, let your investment be for a long time. You understand? Allow the investment to grow, nurture it. You understand? If for those who maintain long-term view, they've benefited. Like I always tell people, you understand? And within time, let me just say this to you. I know of a company, and it's not as if I use them as my case study. Nestle Food. You know, in 1997, Nestle Food was just selling for 19 naira. Today, Nestle Food is selling for over 1,500 naira. Between that 23 years, Nestle Food had given bonus twice. You understand? And, you know, they give regular dividend. And if you go there, you will see most of the things I've mentioned to you. Go and look at Nestle Food product mix. They have product for all of us. Once we're born, once we're 3 months old, they have SMA Gold. We start consuming it. Even up to my age, I still have a product of Nestle Food that I'm taking. So they've taken over our household, and they also participate in the food industry. You understand? It's an industry that you cannot do without. You understand? It sits as the primary #1 needs of man. Man must eat. You understand? We must feed ourselves. So these are the things that can also guide you. Sector that you want to put your money into, food. You understand? You understand? Then what is the next sector? Telecommunications, because these are things that we cannot do without. Then you must also understand the circle. You understand? You must understand the circle of your company. I know when my company is peaked, when they are at the low end of it, that will guide me as to when to sell and when to buy, because I know the business circle. Then you must also try as much as possible. These skills are not difficult. To understand the financials of any company, they are not difficult. Pick the financials, read it, listen to what the company managers and directors are saying. That will give you an intelligence. Take another company. I want to invest in the bank. Take about 3 companies in the banks, read them and ask further questions. Why is Bank A doing better than Bank B? Why is this? By the time you ask those questions and you talk to your stockbroker or your investment advisor, you will discover that gradually, even if you did not reach accounting or you are not somebody in the social sciences, you understand business, you understand how business should strive, you start making, you know, a very good understanding of business. In terms of regulatory actions, you understand, we as regulators, we're there, we are the referee. We ensure that investors are well protected, investors are educated, and I think that is what we're trying to do here. Let's provide that in a platform, let's interact with each other. You know, there are new products that are coming. Sukuk is there, Greenboard. Read more about them. And some of them are giving you fantastic return, double-digit return. Participate in them, read more about it. But be rest assured that if you go through these appropriate channels, if anything happens to you, my brother, participant, you know, you will be amazed when we tell you that we do investors protection. You know, today We have a relationship with EFCC. If anybody is doing anything that is unethical in our market or trying to steal somebody's shares, we take that person, we get the person arrested, we take them to court, we make sure we obtain judgment. We're doing this because we have a market to protect. And we said, look, we're also trying to do something. We give you all the necessary information. Every issue in our market, give people information, disclosure, 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 and let these investors take their word, take their own decision. And go to our website, SEC website, stock exchange website, CSA, even the stockbrokers, even the company, they provide you with regulatory information. You can go through it and understand what you're doing there. Like I said, I'm concluding by saying, please don't invest in an instrument that you don't understand the risk return profile. Are you with me? Don't do that. You must also invest in companies that you understand their products and services and be mindful of deceptive promises on return. Thank you very much for listening. I think it's time for question and answer.
That's a very lovely presentation. Thank you for the insightful submission. I see a number of people are asking for the slides. Yes, we will send the slides after the event. Meanwhile, our participants, please do not forget, if you have questions, box.
I can see some. Do you want me to start answering them?
Hello, sir.
Yes, I said I can see some questions. Do you want to read them?
Yes, sir. Yes, sir. We will take all the questions at the end of the presentation of the second speaker, because we also believe that some of these questions here may have been answered along the line when the second.
So thank you very much. Yes, thank you.
And without further ado, we'd like to call on our second speaker, which is Mrs. Bumi Olarinoye Ni Salau. She's an executive director at Stanbic IBTC Stockbrokers Limited, a wholly owned stockbroking member of the Standard Bank Group, apologies. She commenced her career when she joined the then Investment Banking and Trust Company Limited, as IBTC, as a treasury officer. She has served in various capacities and taken up numerous key roles and responsibilities within that. Currently, she heads the dealing desk of the stockbroking arm. Mrs. Olarinoye is a graduate of accounting from the University of Ilorin and also a chartered accountant. She also holds an MBA from the IE University in Spain. Ms. Olarinoye, thank you for being here, and over to you, ma'am.
Okay, thank you. Thank you for having me. Good morning, everyone. I believe it's still morning. Good morning, everyone. I'll start sharing my screen now. 1 second. Okay, can you see my screen?
Yes, we can. We can see your screen. Please go ahead.
Okay. Thank you very much once again, and thank you to the NGX for this opportunity to make the presentation to participants. And I would say happy World Investor Week. I believe this is a way of one of the ways the NGX is giving back and trying to educate the investors and ensuring that at least capital markets investment is as seamless as possible. So I think I have the easier part of the task this morning. Mr. Babalola has gone into so much details, a very detailed and comprehensive presentation, I must say, about capital markets. So I will just quickly run through my slides. Some of the things in my slides have been spoken about by Mr. Babalola. So my own task this morning is just to talk about the practical investment steps and opportunities in the capital market. So I would start with the investment. I think we heard the word investment, which Mr. Babalola has also spoken a lot about. And basically, it's as simple as, okay, putting your money in something and with the hope that you get something in return. So that is basically it. You're setting something aside or putting money in a particular asset or an instrument just to ensure, just to be able to get something back in return. Nobody puts money aside or puts money in an instrument to lose money. The whole essence is to gain something at the end of the day. So basically what we are looking at, what we term as an investment, is putting money, setting money aside into an asset or into an instrument to gain a future value. And it also fits into what appreciation means. Appreciation is about creating value, or getting value, or improving in value, if I can put it like that. So if there's an increase in the value of what I put aside, I set aside 10,000 naira, or I put 10 naira in a particular asset, then I'm expecting to earn maybe 15 naira or 12 naira. That's appreciation. And that's what investment is all about. Everybody goes into an investment with the mind of getting an appreciation. And like I said earlier, you need to put something aside. So you are coming out to say, I want to do an investment. You have to put something aside, which is resources. It's not necessarily the money. You are putting your time, you are putting efforts, because you need to also understand the investments you are going into. Like the first speaker had said, you need to also read up. You need to learn more about what you are investing. You need to understand what you're investing in before you go into it. So it's a combination of resources that you are setting aside to go into an investment. So quickly, I will talk about the type of financial investment that you can go into. We have the fixed income, which has been spoken about broadly by the first speaker, which involves bonds and treasury bills, stocks, mutual funds, and exchange traded funds. All these ones can be invested on the Nigerian capital market. So they are all available on the Nigerian capital market, whichever one you are interested in purchasing. So I'll focus on stocks and bonds. Stocks are the most traded assets on the capital market. So that's where there's so much focus on stock. Like has been also explained earlier, it's just having a fraction of ownership of a particular company. So if you buy 1 unit of GT or 1 unit of Stanbic today, you're already a shareholder, which means you are part owner of that company. So you also benefit from what the company does, benefit from the returns of the company. If the company has excess and they decide, okay, we want to give our share, or give back to the shareholder, you are entitled to it. So by buying a stock or buying shares of a company, that means that you are purchasing a fraction of the ownership of the company. Then corporate actions, which has been also explained, that's how you make money from investing in companies. Dividends, bonuses, capital appreciation. Like I said, when company have, maybe they've made money in a particular year, they decide, okay, let's give back to the shareholders, they pay it in form of dividends. Bonuses in terms of shares, they can decide, okay, they want to give you more shares. And then capital appreciation, buying from at a particular price and selling at a higher price. That's capital appreciation. Then briefly on bonds, why we are focusing on bonds too is because bonds they are like the second most traded on the Nigerian capital market. So it's a fixed income instrument, and bonds are like a long-term loan that you are giving a particular entity. It can be government, it can be corporate. So you're giving an entity a loan. I'm giving you a loan of maybe 50,000 naira. The entity is giving you a bond, or saying that, okay, I'm bounded to pay you back. So there's like an agreement between the two of you to say that if I'm giving you this loan, I'm expecting something, but I'm giving this loan for a particular period, maybe like 5 years, 10 years, 15 years. And during this period, I'll be getting something in return. What you get back in return, maybe annually or semi-annually, is what we call the coupon. It's like interest. So if you give somebody a loan, there's an interest that you are paying. So that's what the entity is giving you back as the person that is giving the loan. So basically, bonds are long-term instruments, fixed income instruments, while the shorter ones are the treasury bills. Treasury bills run for 1 year. Anything above 1 year is already classified as a bond. So you have government, like I said, the most popular ones are the federal government bonds, which are the most traded on the capital market today. You also have the corporate bonds, bonds issued by corporate entities, listed entities, and you have state government bonds and different kind of bonds. But in simple terms, it's just a loan. So it's not complicated. It's a loan. I've given you a loan, you're giving me a bond, and I'll be getting something back in return. That's what it is. So treasury bills are mostly issued by the Central Bank of Nigeria, CBN, just to provide short-term funding gaps for the government, and usually they don't last more than 1 year. So all those other ones are just terms that we use in bonds bonds investment. So like I said earlier, coupon is just like interest rates. I've given you a bond of I've given you a loan of 1,000. I'm paying coupon 5%. If it's 5% semi-annually, that means that every six months you get 2.5% on that loan that you've given out. So usually most government bonds pays coupons semi-annually, so you get that interest on a periodic basis. So moving on now, we also have mutual funds. Mutual funds basically is like a pool of investors. So you have a fund manager or like a professional advisor or professional manager, a fund manager, pulling together funds from different clients and investing them. So the fund manager is responsible for the investment, and basically it makes it easier for you as a client, because you don't have to worry yourself, okay, what do I buy, what do I not buy, that's the work of the fund manager. And mutual funds makes it easy for you to just put your money in a mutual fund and then somebody else takes care of the investment. But the thing is that usually it's guided by a particular perspective. They don't just invest blindly, they give like an idea of what they will be investing in. So mutual funds give small and individual investors access to diversified and professionally managed portfolios at low price. So you are not buying the stocks directly on the floor of the exchange, but you are putting it in a mutual fund, which directly or indirectly gets those investments on the floor of the exchange. Then you also have ETFs. ETFs are like a basket of securities targeting a particular index. So examples of the ones we have right now, we have ETF 40, ETF 20, ETF 30. Those ones are basically focused, or they measure a particular index, maybe the 30 most capitalized stocks, the 40 pension assets. So you have different ETFs listed currently on the exchange, and it depends on what your target is and what your investment plan is. So going ahead, like I said, basically what I'm talking about is how to invest, or how you can, or steps to take when you want to invest. So the first thing you have to look at is your income. Like I said, you set aside resources, and the most important resource here is money or funds. So what funds are you putting into the capital market, or what funds are you putting into the investment? You don't put in funds that you need urgently, or funds that you need on a regular basis, on a day-to-day basis. It's better to look at all your expenses and the money you're able to set aside, maybe for a medium to long-term basis, because the capital market has been, for most analysts, would say that capital market is better for you to do a medium to long-term investment. It's not something that, okay, I want something back in a month or two. Find the opportunities that might come in here and there. If you want to do speculative activities, those are also there, but you have to be very, very careful, because the same way you can earn and gain and make so much from the capital market, you can also lose that. So you need to be very careful. So funds, income, that is the most important thing. How much are you setting aside into the investment? Is it going to be like a continuous investment? Usually it's better when you put something aside, maybe every month. You can say that, okay, at the end of the month, after taking out my expenses and everything, I'm able to maybe put aside maybe 10% or 20% of my income into investment, and it helps grow your investment portfolio. So it's something that you need to critically assess, because without that income, it's easy for you to get money, put money into it and start taking it out, and then before you know it, you don't have so much left in there. And also, if you're looking to invest, you also look at the stage of we look at the stage of life cycle, maybe in terms of age. So when the younger you are, the more risk, what's the word now? You are not risk averse. You are able to take more risk. So you are able to put in more money, look at things that are a bit risky, and then you're able to go into it. So because what they say is, the higher the risk, the higher the return. So at a particular age, when you are still in active service, when you have steady inflow of funds or income, you're able to take more risk, rather than when you are getting a bit older, once you are getting to that age that you are approaching retirement, you tend to look at, okay, what are the investments that will give me constant flows, because you maybe by the time you retire, you won't be getting your salaries again, and then you just need to relax, and you need something that will be coming in periodically. So it's good to look at, okay, your risk appetite. Am I in a stage where I can consistently get funds to put in an investment, or am I at a stage that I don't really have funds coming in? I don't really have so much outlets. I have so much outlet, but I don't really have so much coming in. So you need to focus on that before you make that investment decision. And also, in picking your investment type, you also look at, okay, in going into this company or buying this company shares, do they pay dividends regularly? Do they pay do they give out bonuses? Are these things that what are the benefits for me? So those are things that you really need to look at, because you can't be as aggressive or as risky or as risk. I'm still missing the word. You need to just calculate your risk at some point, because if you put all your money in there and you don't have other flows, other money, other sources of inflow, then it might really affect it might really affect you. So stage of life and the way and the age and your inflows really matter. Another thing I wanted to say here is source of funds, which is something I also said part of that. So source of funds, it might be something like maybe you're getting an inheritance, or if you're a salaried worker, you need to plan properly. So which is what I was trying to say. If you're a salary, you know that your only source of income is your salary, then you need to plan appropriately. If it's maybe an inheritance, okay, for an inheritance, I can maybe do a long thing, or is a gift or something, you can do a lot, but you can do something that is more risky than going for something if you're a salaried worker. So you need to be a little bit conservative, look at the profile of the investments you want to go into before you go in there. Then you also look at your ambitions. What do you want to use the money, or the investment, the profit from the investment, what do you want to use it for? Is it for properties? Do you want to acquire properties? Do you want to, for your children's education, for maybe enjoyment, maybe travel, everything? So you need to also look at your investment objective. What exactly am I trying to achieve by going into this particular investment? So also looking at what to invest in. If you want to consider, okay, this is the investment I want to go into. So what I think you should look at, I think Mr. Babalola also touched on that briefly, and is some of the things you need to look at is the asset quality of the company. Look at the financials. How have they been faring for the past maybe 5 years or 3 years? You need to look at the corporate governance. Look at the historical performance. I think historical performance has to do with, sometimes you look at the price analysis. Sometimes you look at the company performance in terms of revenue generation. Look at returns, look at corporate actions that we declared over the years, look at the technical analysis. Those are some of the things you need to look at before you go into any investment. You don't want to just invest blindly to say, okay, somebody just told me that Morrison has gone 500% or 300% within 8 months. Let me just go and put my money in it. You also need to analyze what exactly is driving it. Is it a sustainable business? What is their expense line? What does the future hold? Is it something is it a company that will be there in the next 5 or 10 years? So those are things you need to look at. So asset yield too, we've talked about that, dividend yield, current yield. I think something I'm not sure I mentioned that when I was talking about the stage of life. At some point, too, bonds can be a safe haven, especially when you're approaching retirement or retirement, because usually when you invest in federal government bonds, like I said, they pay coupons semi-annually, which is guaranteed. And then the thing is, at the end of the day, when the bond matures, you're sure that you're getting your face value, or you're getting the amount you invested back in full. So let's say that you bought a 5-year bond, federal government bond, that pays the 10% coupon semi-annually. So if you put that 10,000 naira in it, every 6 months, you get 5%. So you know that every 6 months, something must come in at the end of the day. So 6 months, June, you get 5% of the 10,000 you put. December, you get another 5%. So those are some of the things you need to consider before you do that investment. So that talks about the yield. Then return, like I also said, the return that the company is going to give. And then you also look at other things like interest rates, the time frame of investment. I think that's also very, very important. If you look at the time frame, are you a long-term person? Are you a short-term person? Do you need the money within the short term? So if you are somebody that needs money for a short term, what is the best investment to go into? It might not be stock. If you need money in the next 3 months, there are T-bills that are 3 months that have a maturity of 3 months or 6 months. So when exactly do you need the money? Well, what do you need that investment that you're going to? What time frame is your plan? So there are bonds to the 5 years, 10 years, 15 years. Maybe you're saving towards your children's education the next 5 or 7 years or 10 years. So you can put that aside, say that, okay, in the next, I'll be getting this and then I'll be investing. Same way with stocks. Usually medium to long term is the advice for investment in stocks. So you're looking at the company and you're saying, okay, I'm investing in a particular company today. In the next 5-6 years, if you look at the financials, look at the historical performance, you look at the fundamentals of the company, and you say, okay, in the next 5 years, this company will still be standing. And if you look at historically, they've always been paying dividend, they've always been paying corporate actions. So why not? So you need to also judge that before you go into an investment. Then another thing which you also need to do, which I said part of the resources you need to invest is time. You need to be able to look out for news. So if you've made a particular investment, you're a part owner if you're buying shares. So you need to look out for news, look out for research, recommendations, look out for analysis, look out for anything that might affect this company, because you have interest in that thing. So you also need to be on top of things. And before you even go into the investment as well, you also need to study, research, recommendations and what analysts are saying. Analysts have done a number of analysis, empirical analysis, historical analysis, so many analyses. So they're in a better position to tell you that, okay, this and this is what they will recommend on a particular investment. So it's better to also look at research recommendations before you go into any investment. So how do you now invest? Number one, like we said before, you have your investments, initially your capital, how much you're putting into the investment. Depends on you, can be as low as 10,000, can be as high as 100 million. But it's good to also know your investment objective and assess your risk profile. So for somebody who is conservative, like has been said earlier, so you don't put all your money in equities, you can try and balance it to say that, okay, let me put some in bonds, let me put some in treasury bills, let me put some in equity, so that at least I have like a diversified portfolio. And you also look at, okay, having diversified portfolios, you can be, okay, having some banking stocks, having some telecom stock, having some Nestle stocks, so like a defensive stock, so that at the end of the day you are not concentrating only on one stock. But it's good to build your portfolio to over time, so that you don't just put everything at once and then you're looking at it and then you're having high blood pressure. It's just good to, over time build it based on your assessment of your current investment. So once you've made up your mind, okay, this is what I want to do, and you have the capital, then get in touch with the stockbroker, because for you to invest in Nigeria today, you need an intermediary agent, which is the stockbroker. So without a stockbroker, you can't make an investment. So you need a stockbroker to start investing on the capital markets. And then for mutual funds and for you to, some ETFs, you need to also get an asset manager. But basically what we're talking about is capital markets. And so get in touch or open an account with your stockbroker, and then seek professional advice, like I said, research recommendations, and then also talk to your stockbroker on some of the investment recommendations that they might have. Then follow news, make sure that items, the things that might impact the company, you're following them closely. You're looking at the economy, what's impacting the economy and which might affect the capital or the stock market. Like I said, mentioned by the earlier presenter. So there's an inverse relationship between the stock market and the fixed income market. So basically, if interest rate is going up and you see government borrowing at a very high rate, that means that most people want to borrow the government money, which makes sense, because government is paying something high. So if you look at it, because if you compare with, okay, the return I'm going to get, the dividend yield I'm getting from the capital market, if government is giving me an interest rate of maybe 15%, or maybe, okay, in the current climate now, maybe around 9% or thereabouts, and dividend yield I'm getting is around 7% or 8%, it makes sense to also go to that route. And then if it's coming down, definitely that means that it's better to do capital market investment than the bonds investment. So all these things you need to also keep track and pay attention to, so that you can build your portfolio successfully. So how do you open an account with a stockbroker? Usually there's a standard across the board for most stockbrokers. We have over 100 stockbroking firms in Nigeria today. So there's like a standard, but basically each stockbroking firm also have some peculiar KYC process. So the first one is you complete the account opening form, you submit your KYC documentation, which is, like I said, those are standard things across board, KYC, and then there are some other things which a stockbroker might ask you. So the moment you do that, and for some stockbroking firms, you're able to open your account online. You don't have to go physically, or you don't have to leave your house to do all those things. By sitting down at your desk from your phone or your system, you're able to open a stockbroking account, provide all the KYC documents. And the way it is now, there's what we call DMA access, direct market access, with the NGX has also provided. That means that you have access to see what is happening directly in the market. So the moment you open your account, you fund your account, you're able to have access to the capital market, and then you start trading. It's as easy as that. So other stockbroking firms also have the mobile app, so that, which I mentioned, on your phone, you can just go into the mobile app, download the stockbroking app, and then you are good to go. You open your account and you are good to go to start trading. So general terms, I think I've used some of them loosely in my presentation. Dividend, we will talk about the portion of earnings which a company has decided to give back to the shareholder. The stock exchange, this we were talking about now, where we trade, where we buy and sell all these investment instruments. And we talked about the trading time, which is between 9:30 and 2:30, although the actual trading or continuous trading starts between 10 and 2:20. So over the counter, that means that it's maybe a security that is not listed on the exchange. That's what's called over the counter. That is traded over the counter. It's not listed on any exchange. Stock, we've also used that to indicate ownership of a company, and then a share certificate is also having like a particular proportion of the ownership. So when we talk about bull markets, that's when everything is going up. Prices are appreciating. Prices of listed stocks are appreciating, and a bear market is the opposite of the bull. Things are coming down. Order is when you show an order, a sell order or a buy order. I want to buy, I want to sell. Bid is when there's bid means buy. You want to buy. Ask means offer. You want to sell. Sometimes you hear in the market that something is on full bid. That means that everybody's buying. There are no sellers. When you say it's on full offer, everybody's selling, nobody's buying. So usually these are terms that stockbrokers use, that okay, it's on bid, it's on offer, or there are bids, more bids than offers. So those are you simply buying and selling. People are buying, people are not selling, people are selling, people are not buying. So those are the terms. Then bid and ask spread. That's just the spread between the bid and ask. I bought at 10 naira, I'm selling at 10.20. The 20 kobo is the spread that you are making on the investment. So if you buy a particular thing, your intention is definitely to make a spread. So when you buy at a particular price, you want to sell at a higher price. So that is the spread you are gaining as an investor. Other terms that we also use the market order. So as an investor, you can tell your stockbroker, okay, I want to buy this stock or whatever at market price. Market price means whatever it is trading in the market. So you are not limited by a particular price. Whatever you see it in the market, buy it at that price. So that's what a market order means. A limit order, however, means that you have a particular, maybe you've done your analysis or based on recommendation by analysts. There's a particular limit to say that, okay, it's currently trading at so maybe 5 naira, but based on analyst calculations, you should be trading around 4 naira 50 kobo. So you have put a limit to say that don't buy above this, or based on what you've seen or your own personal calculations, you have a limit. So that's what is called limit order. Then day order is an order that doesn't expire, that expires in a day. So if I give you this order today, it must be, if you don't fill it today, by the following day it has expired. So that's a day order. You also have go to cancel. That means that it's an open-ended order. So if you give me an order today, if you say go to cancel, so go to cancel maybe like 30th of September, or sorry, 30th of December 2021. So maybe it's something that you are good to go. So you just give your stockbroker that instruction, and giving the instruction, go till cancel. So IPO is something that has been mentioned by the first speaker as well. IPO is like the first time a company is bringing its shares to trade on the floor of the exchange. Market capitalization is the value of a particular company in the market. So if you look at the total number of shares that the company has and the particular price is trading at a particular moment. So market capitalization is that value of that company at that particular point in time. So index is used basically by investors to measure market performance. So particular index to say that, okay, this is what this index is doing. You have the ASI, which is the all share index, which is used to measure the performance of the Nigerian Stock Exchange. You also have other indexes, which some of this ETF too also measures. You have a number of indexes on the exchange. Then your portfolio. Portfolio is a combination of all your investments, all the investments you've made. So sometimes you say, okay, what's my portfolio value? That is the value, the price, or if you look at today's price multiplied by all your investment, that is the portfolio value that you have today. So what are the benefits of investing, which has been we've talked about severally? Capital appreciation, corporate actions, bonuses, dividends. This is giving back. Company has done so well, giving back to the shareholders. Capital appreciation, a company has moved from point A to point B in terms of price. Long-term growth. A company is doing very well. It also affects you because you're also a part owner of the company. Then diversification, you're not putting all your money in one particular investment. It gives you that opportunity to diversify your risk. It makes you spread, okay, you are not concentrating all your risk or putting all your eggs in one basket. It is an opportunity for you to look at different segments of the capital market, different industries, and put your investment in different industries so that you diversify your investments. And then I'll talk about corporate actions. You have rights to vote at the AGM. When the company is calling for a meeting, you have a right to attend, no matter the number of shares that you have. And then collateral for loans. You can approach your bank today with your stocks or your bonds and say that, okay, this is what I have, and they're able to do evaluation and give you loans. Then embassy and immigration purposes. These are letters that your stockbroker can also produce for you so that you can approach your embassy or for immigration purposes. Same thing with mutual funds is going to help you to diversify. So like I said, for mutual funds, you have low cost because basically you're not paying. If you buy on your own, you are coming to the stock market so that I'm buying on my own. You are paying the full charges of transacting. But if you go through a portfolio or a mutual fund, you are kind of sharing amongst the people in the pool, because mutual funds, you bring together a number of investors in a pool. So you share the benefits, share the cost, and it has its own advantages too. So capital appreciation too is something that cannot be well-resized. Then investment, like I said, expenses, portfolio management. You have somebody who is advising you as also manage your portfolio. You don't have to worry your head about that. Then collateral for loans and embassy, same thing. Then bonds, predictable income stream. At the end of the day, like I said, you already know that at the end of 6 months, you get, except it's a zero coupon bond, which is not common in this part of the world. Most of the bonds issued come with the coupon. So that's like the interest that you are earning. So every 6 months or annually, you are getting something back. So it makes you even plan your income or your spending or whatever. So it's predictable. And then capital preservation as well. And also diversification. If you're a conservative person and you don't want to put everything into equities, it kind of reduces that risk, a volatile stock market movement, the collateral for loans as well, and of course low risk. Then ETFs do the same thing, dividend capital appreciation, and it also helps in diversification. So I think that's where I would stop right now, and I'm open for questions. Thank you very much.
Thank you very much, Mrs. Bumi, for your presentation. Thank you. It is really appreciated. We have a number of questions here already, and I'm going to start with the first one. It says, this is from Abigail Alili. I hope I got that correctly. And it's saying, thank you so much for this education. Please, how can I calculate my risk for a particular stock? But I think I'll direct this to you, madam. Let's start with you. Can you hear me? Mrs. Olari, are you there?
Can you hear me?
Yes, we can hear you now. Did you hear the question that I read out?
No, sorry.
Okay. It says that, how can I calculate my risk for a particular stock? That's the first question we have.
Calculating your risk can be, it's relative. It depends on you as an individual. So what is your investment objective? What exactly are you trying to achieve? And what kind of time frame for the investment you have? So maybe you have money that you want to dedicate for maybe a particular project in a particular number of years or time frame, then it's something that you need to look at, okay, what kind of investment will suit my investment objective and horizon? So you won't just go straight to pick a stock because everybody's picking it. If maybe the projection or is something that maybe it's a particular company that pays maybe dividend once a year, are you able to wait till the end of the year for them to pay dividend for you to get something back? So everything depends on you as an individual and your investment objective.
Okay, thank you very much, Mrs. Bumi, for that answer. We'll quickly go to the next one, but before that, please, I want to join the participants once again. Please, if you have questions, use the Q&A feature, not the chat box. Thank you very much. Okay, so this one is from Mohammed Ibrahim, and it says, do we have the presence of derivatives markets in Nigeria? And if it exists, at what stage? Mr. Babalola, can you help us answer this, sir? Thank you.
Yes, thank you very much. To answer your question, because we're looking at Nigerian capital market, the derivatives market does exist today, but it's in an OTC, where people just take advantage of what we call forward, a bilateral agreement between two parties. But I can tell you, before the end of this year, we are going to launch what we call exchange-traded derivatives. And exchange-traded derivatives you're going to see would be what we call futures. You will see us gradually move into call, what we call options, call and put. But to answer your question, derivatives does exist as we speak today, but it is in an OTC market, a bilateral between just two parties. But the one we're going to introduce as an exchange is going to be called exchange-traded derivatives, where you will see the buyer, you will see the seller, and you will see other market participants performing their roles as to margin calls and a lot of things, and regulatory and regulation. But to be rest assured, I just don't want to put a date to it. But before this latest, by fourth quarter of this year, which we're in already, you are going to see us launch the exchange-traded derivatives. Thank you.
Thank you very much, sir, for that succinct answer. Quickly, I have this question from Julius Ayodele. He says, great talk and education. Please, how can you help our senior citizens, possibly those that have just retired? But I assume that, okay, we have your email here. We will get back to you on this because this is not a very clear question. Is it for, how to invest? Is it, how to recoup their investment and, stuff like that? But we will get back to you for clarity. Thank you, Julius Ayodele. Then this one will go to you, sir, Mr. Babalola. two questions actually from Gerard Osuji. He says, is there a minimum cap requirement before getting a listing status? And also secondly, please tell us more about indexing in the NGX.
Thank you very much. I think what you have, we have three boards. What we mean by that is classes where company can get listed. You have the premium board, you have the main board, and you have what we call the growth board. So irrespective of your size, you can start with the growth board because it's only the premium board that requires that you must be of a certain size in terms of something. But for growth board is to envisage a startup. So really to answer your question, to be listed on this Nigerian Stock Exchange, you don't need a minimum capital. No matter how small your company is, once you meet our requirement as in terms of distribution of ownership, you understand? If you are going to be an ASM, what is the total number of shares that the number of shareholders that you have, and the proportion that will be in people's hand? You understand? Then I'll also refer you to our website where you can see the details of this. But you don't need, it could be as small as that your company. You understand? What we expect of you is to show us your projections and to be sure that you have shareholders, because it's not a regulated industry where we say until you have certain minimum capital, you cannot be listed. Once you have what is sufficient for you to go into business, you have a product and services that you are rendering, you can approach the exchange. Then we will nurture that company. Today, we've seen companies that started as small companies that are now bigger companies. Today, the tech folks, they are raising money. You understand? And so what I'm saying is there's no limitation. It's just like once you have the advantage, you have a thriving business, you understand what it is, approach us. We will take you through the process and your company will become listed. The other question is, you said I should take you through indexing. Now, because investment is wide and it comes in various forms, even the companies that are listed on the exchange belongs to different sectors. We've talked about investment styles. We've thought about, so people now come up with index to measure, to serve as a barometer to gauge what is going on in that particular sector or in the market. Take for instance, I mentioned two things. I said last year, Nigerian Stock Exchange, or the Nigerian Exchange, NGX, returned 50%. The question is, how did I know it's 50%? It's because there's an index that have been set that is calculating this. How did I know we returned the highest in the whole of the world? It's because I compare our own index with other nations' index, and our own index gave the highest return. So we have indices that covers banking sector, sectorial indices. We have indices that cover style. We have indices that covers whatever pattern of investment you want to do. Then that can guide you. Take for instance now, I'm new to investing. And I want to know what is going on in the banking industry. I have two ways of doing it. Gather each of the companies of each of the banks, or go and look at banking index. That will tell me whether the banking is outperforming or is falling short. So index is there, and some of these indices are tradable. Take for instance now, we have what we call an ETF called New Gold. You understand? It is tracking performance of gold. So if you want to have an exposure to gold, instead of you buying the gold, you can just buy into the ETF gold. We have what we call NSE 30. That is the 30 most capitalized and most liquid stocks in Nigeria. It might be simple, it might be difficult for a retail investor to say, I want to buy all the 30 companies. Are you with me? But you can subscribe to an ETF that is tracking that index. Thereby, you are having an exposure to that same index. Even with your 5,000 naira, 10,000 naira, 20,000 naira, you buy into the ETF invests in NSE 30, and you're also benefiting from it. So the index is there for you to serve as a barometer, for you to measure the performance. The index is also there for you to invest because it tells you whether that sector is performing well or not. Thank you.
Thank you so very much, Mr. Babalola. This one will go to you, Madam Olarinwoye. It says, for how long can I hold a bought shares?
That also depends on you and your investment objective. And another thing I would say is you also need to consider your entry level, and then look at sometimes it's good to put something down in terms of percentage appreciation. So if you look at it, say that, okay, I bought something at 10 naira, the moment it gets like maybe 12 naira, maybe like a 20% appreciation, I'm good to go. But other times you look at it, say that I'm a long-term investor, and I believe in this company, and I believe that it's going to do well. So you might want to hold stocks based on what your investment objective is. You might consider your entry point. You might consider the how well the company is doing, and you might also consider the return, the corporate actions and capital returns from the company. So it depends on you as an individual. But all in all, you are investing and holding the stock to make a particular return, not to lose part of your capital. Thank you.
Thank you very much, Ma, for that. Okay. Dr. Philip Jill is asking for the slides, and like many other persons as well. And again, let me reiterate that we will send the slide. After this, we will send an evaluation link to the chat box. Please click on that evaluation link. Fill it. In that evaluation link, there is a place for you to enter your email if you want the slide. So you can put it there and we will send it to you. Thank you very much. This one goes to you, sir. He said, please, can you help us with some of the best brokers in Nigeria?
I think it's, if you go to our website, because I mean, it's out of the rules of my own engagement. I can't say, because I regulate all of them. So, but if you go to our website, what are those things that you can watch out for that will make you select a broker? If you go to our website, you must ensure that that person is registered with the exchange. There's what we call broker tracks. It tells you, on our website, it tells you the kind of brokers that have violated our rules, meaning some people that are falling short of their regulatory performance. Also, these brokers also have websites. Visit those websites, get to understand more about them. You understand? But like I said, be rest assured that if you're picking from any list, in our market, that in market is regulated. Two is for you to know your rights, so that the moment you are dealing or interacting with a broker and he's taking you out of those things, you will know that this person is not a registered broker or somebody that wants to do something. What are those things? Once you want to open an account, after filling your form, you must put your what? Your telephone number. With that telephone number attached to your record in CSCS, it means that for every transaction that is done on your behalf, you will receive an alert. That alert is is there for two reasons. One, to inform you that a trade has taken place. Two, is to tell you the details of the transaction that took place. So that if you receive an alert that says, oh, my shares was sold for 20 naira, the broker cannot come and say, I sold it for 18 naira. Or you receive an alert that says, oh, the shares that was bought for you was done at 5 naira. And the broker now says, oh, it's done at 6 naira. You quickly confront the broker with that. And if you see that you receive an alert and you did not ask the broker to transact on your account, you call the exchange. You call the CSCS to say, I did not authorize this transaction. We will immediately invite the broker to come and give reason why you choose to transact on your account when you've not given them. You understand? So for me, we have our brokers are fine, they are good, but know your right, know what is your own responsibility, and also check this broker track so that you can see, we report, we have this name and shame policy at the exchange. If a broker is violating our rules, you understand, we shame them by putting their names on the list. And technically what we're saying is, before investors start dealing with them, make sure you check their compliance record. That will guide you, and visit their website. Even if it is going to be once, make sure you visit the office of that stockbroker too. And you can call us at the exchange in case you need clarification, about any stockbroker that you want to invest in. Thank you.
Thank you so very much for that. Okay, so another question we have here is from, it says anonymous attendee. Two questions actually. So which investment in the market will give him positive real return at this time? And secondly, how does it determine the appropriate time to buy at premium? Madam Bumi Olanoye, I would allow you to take this one.
So there are a number of stocks that will give you positive returns at this time. You just need to study the stocks, and you need to study some of the reports out there. So what a number of brokers do to send out stock recommendations based on analyst reports, and that's also what we also do as well. So there are stock recommendations that at least they give positive returns at the moment, and the timing of entering a particular investment also depends on how the company is faring, the news of the market, and a number of factors. So those are some of the things you need to study, and also talk to your stockbroker so that you can also advise you or give you stock recommendations as appropriate.
Thank you very much, ma'am. And the second one said, how do I determine the appropriate time to buy at premium?
You don't want to buy a premium. You want to buy when it's trading low. It's for stocks to buy low, sell high. So that's the way it is. So you don't buy a premium, you buy at a discount. Not a discount anyway, maybe when it's trading low, or maybe you foresee that it's going to appreciate further in future. So like I said earlier, it's something you need to talk to your stockbroker and also study a number of research analysts or research recommendations, so that you know when best to go in. Usually, sometimes, for most companies, they also do dividends or corporate actions mid-year and end of the year. So sometimes you might also look at, okay, which are the companies that you know that for the half-year results, they're going to declare maybe a dividend. You're targeting that dividend. You might also want to go in before they declare dividend and before they make payment. So half-year is out now. So what we have now is full year result, which is going to come out by December 2021. So it's going to come, result for December 2021 will come out by next year. So those are some of the things you might need to put into consideration where you want to enter or where you want to go into a particular investment.
Okay, thank you. Just before you go, there's the third of the trial questions from the 10% says, please expatiate on the difference between share and stock.
Okay, so basically they can be used interchangeably. They basically mean the same thing. So if I say stock, you're buying a particular company's stock. But if you now look at the unit, if you want to buy, maybe the unit measurement is what we call shares. So you can say, okay, buy me 5,000 shares of the Stanbic stock. So it's all they both mean the same thing in terms of ownership or having a fraction of ownership of a particular company. So stock is when you call maybe you for a particular stock, and then shares maybe the number of units. Instead of saying units, you say shares. Buy me 5,000 shares, 10,000 shares, or something of this particular stock. So basically, that's it.
Okay, I have also something that looks quite similar to some of these questions you've been answering, ma'am. And this one is from Chinonso Ogona. Says, is it advisable for a beginner to start with penny stocks? And secondly, can an investor have multiple accounts with different stockbrokers?
Yeah, there's nothing wrong with penny stocks as long as you know that the penny stock is doing well, that the company is doing well, has the necessary fundamentals, and you know that it has a sustainable business. So penny stocks, they are a good way to begin for a beginner. So it's as long as it has, like I said, you know that it pays returns good, gives good returns, and also has the fundamental backings. And then the second question was, so what was that? What was the second question?
They said, can an investor have multiple accounts with different stockbrokers?
It's allowed, but it's not advisable, so that you can actually monitor and keep track of your investments. Because if you have multiple accounts with different stockbroker, you have to be in touch with this broker, be in touch with that broker. So for easy monitoring and tracking, it's better to consolidate your investments with a broker. But it's something that is allowed. You are allowed to. The NGX does not place a restriction, or the CSS does not place a restriction on that. You can decide that, okay, I like this 4 brokers, I want to keep an account with them. As long as you're able to monitor and track your investments with them, it's up to you as an individual.
Thank you very much, Ma. We'll come back to you. Over to you, Mr. Babalola. And this question is from Mohammed Ibrahim. So he says, given the vast majority of the well-to-do individuals in the northern part of the country that are not investing in the capital market due to the fear that it is not lawful under Islamic law, and given the few number of Islamic capital products in the Nigerian capital market, is there any effort put in place to introduce more Islamic capital market products to attract people from that part of the country to participate in the capital market?
Yes, thank you very much, Mr. Mohammed. Yeah, I mean, I understand a bit of ethical investing, a bit of Islamic investing. That is why you will see that buying shares itself is not wrong. So I can buy shares provided the product or the services is Sharia compliant. So the Nestle Food of this world will qualify. Total, majority of the companies that we have, especially except that people who have reservation as to maybe insurance, the breweries, and probably the banking sector. Now, to your question, what are we doing? You will see that we have an index. The Lotus Islamic Index, was focused on creating Sharia compliance product. We have some Islamic banks that are already quoted. Jaiz is already listed. We learned that Lotus Bank have also been licensed. Once they start operation, we'll attract them to be listed in our market. So a lot of the, like I said, I can say 70 to 80% of the stocks that are listed in the market are things that, whether you are into ethical investing or Islamic, you can actually participate in. So like Rally said, we're doing a lot, and that is why you will even, like I said, we have an index in itself, which we created with Lotus Capital then. It is called NSE, or you call it NGX, Lotus Islamic Index, meaning you can also invest in that index. That index itself also have products that has been screened to be Sharia compliant. When you go to our website, you see the listed companies there. You can also pick from there. So really, what I will assure you is that we're trying all our best to introduce product that covers everything that people can invest in. And you will agree with me that we've done a lot in educating people about what they can, that even the existing product that we have, majority of them qualify that they can invest in. Thank you.
Okay, thank you, sir. Another question we have here is, this is from Geoffrey AY, and he said, please, what happened 9:30 to 10 a.m. and 2:20 to 2:30 p.m. on the floor of the NGX?
What happened between what?
9:30 to 10 a.m. and 2:20 to 2:30 p.m. on the floor. So
what you see happen within those periods is what we call, they are the auction section of the market. So take, for instance, now, the market will close by 2:30 today. It doesn't mean that after 2:30, things are not happening in the economy. So things will happen on Friday evening after the close of business. Things will happen on Saturday. A lot of things will also happen on Sunday. So when you come to the market, you want people to reflect the new development into the share price of that security. So you go into an auction so that you can determine the new fair price of that particular security. Then after that, you transit into what we call the continuous trading. But that stage is where price is being discovered to say, between when we left yesterday and when we are starting today, what are those new things that have happened? And how do we factor those into the opening price of that security? Then in the later end, when market is about to close, you also create another auction to allow people to come together and determine what exactly is the fair price that these stocks should close at, which is also another auction. The reason why this is done all over the world is just to ensure that no individual is influencing the opening price of a stock or influencing the closing price of a stock, because that is where manipulation actually takes place. Thank you. Hello?
Oh,
Yes.
apologies. I was muted. Thank you very much for that, sir. So we'll take a couple more questions because our time is fast spent, and then we'll call it a day. All other questions, yes, we can give a written feedback to them. But again, please do not forget to fill the evaluation form and include your email there if you want the presentation slides in the evaluation form. Okay, so this one is from Robinson Nally. It says, do stockbroking firms have these features, limit order, good till cancelled order, and other terms talk about? Because I've seen some apps by investment banking companies and they don't have these features. Madam Olare, I think you should, answer this one.
Okay, thank you. Yes, on the trading engine, there's a platform that we use in trading, which is called the exchange, and all those features are available. So it depends on what you put the portal of the stockbroker, what the stockbroker has enabled on their own portal. So, but like I mentioned earlier, there's something we call direct market access. So when you have that feature, you're able to go into the market directly and also enable some of these features. So if you want the limit order or the market order, is something that you can easily put there, even from the stockbrokers portal, something you can put there, and they're all enabled on the trading portal.
Okay, thank you once again, ma'am. I have a question from Ifeolu IBME, and I think this is also directed to you. He said, thank you for the presentation. Please, what are the ETFs and how do one trade them?
And how do one what?
How do one trade them? How do you trade these ETFs? So what are they and how do you trade them?
Okay, as explained earlier, ETFs are like a basket of securities that are now put together, and then they are being tracked by a particular index. So they are listed, some of them are actually listed on the NGX as well. So if you want to buy, they are managed, most of them are also managed by asset managers. So if you want to buy or sell ETFs, you can, the same way you want to buy stocks because they are listed, you can say, okay, I want to buy 1 unit of this particular ETF. So you have the ETF 40, examples of some of the ETFs listed, ETF 40, that so this one tracks the, I think, 40 most capitalized stocks, and then you have the pensionable stocks. Those are the ones that ETF pension index, those one tracks stocks that can be invested by pension managers. So it depends on whatever index ETFs you want to buy. But so if you say, okay, let's say as an example, if you're saying the 30 most capitalized stocks, that means that all the stocks, you look at the number 1 to 30 of the stocks with the highest market capitalization, look at the 30 most capitalized. That is what that index is that particular one is tracking. So that means that if you buy 1 unit of that stock, you have access to the 30 most capitalized stocks. That's why I say it's a basket of securities, which the ETF tracks. So if you buy 1 unit of that, you've gotten a fraction of each of those stocks. So you have 1, or if you buy 2 or 3, whichever one you buy. So that is the way it works. And if you want to buy it, it's the same way it's trading on the floor of the Nigerian stock, the same way stocks are traded. Just give your stockbroker the instruction to buy or sell, and you're able to buy it or sell it on the floor.
Thank you very much, ma'am. I'm over to you, sir. This is from Silas Kanwai. Say, where can I check the trending of stocks over a period of time? Example, I want to check the Stanbic IBTC stock performance from 1st of January 2021 to 30th September 2021.
So I think if you check, this is it. If you check our website, you should have that information. As we also encourage every issuer to have what we call investors relations website, where you can also check. If you check on CSCS, you can also get this. And if you don't get them, email us. I'll definitely provide that data for you. But we do have such data, and we do make them available. Hello.
Thank you very much, sir. So the next question, which will take about 3 questions, and then we'll call it a day, sir. So the next question we have here is from Adedayo Ade Dinshewo. I hope I got that correctly. He said, "Is there an app to trade the Nigerian stocks without having to meet brokers or stockbroking firms?" Mr. Babalola, please.
I think you have to be your entrance into the market is actually through a stockbroker. But what we're saying is that once you do the initial registration, create an account, a trading account, and an account with a broker, then with the advent of technology, you don't have to visit their office. They now have an application that you can download, and you can do your buying and selling yourself. Some of them offer that services today, and that is what we encourage. So you visit them once, and when you even say visit, you don't have to be physically there. You connect, you go to their website, they ask you for your KYC, you provide all those KYC, and once they onboard you, you can start trading from there. All what you need is, if you are trading, make sure that you move money into their account, and if you're buying, they move money into your bank account. And that is why you will see that these days, when they are completing your KYC form, you will have specified the bank account you want to use, you will have specified your BVN. It means that all your financial transactions go into that bank account. So unlike before, where for every transaction you need to call a broker, no, you can actually have that app that you set up your account, and you can start buying and selling, because they are the ones, the brokers, through their back end is responsible for settlement of your trades, and also, opening up of an account for you. So but it could be something you can do online that you don't have to interface with them, or in the worst case scenario, you visit their office once. Once that KYC process is completed, you don't necessarily have to visit them. Just the same way, if I want to open a bank account, the only time that I have to be there is when I want to open the account. But by the time I open the account, I have my cards, I have my account, I can start transacting without necessarily visiting the bank. So the same thing has been extended to the capital market. Make sure that you open an account with them, you do your KYC. Once that is done, you can fund your account without visiting their office, and you can buy and sell. You can even see, like the other person that said, I want to see the share price of, once you, with your app, with the application from your broker, you can even see the trend of each of these securities, even with a search on, but a lot of places where you can get information. So today, like I said, the first thing you need to do, open an account with the stockbroker, get the application installed that give you access to the market, and you can start doing the buying and selling on your mobile phone without having to visit the broker again. Hello?
Thank you. Yes, sir. Thank you very much for that. This next question, Madam Bumi, I think you would help us to take this. It is from Michael Oshilaja, and he's asking, how can investors be assisted on the issue of e-dividend in view of failure of registrars in capturing some of these investors after submission? Over to you, ma'am.
Okay, this is actually something that has been in discussion for some time, and it's still the responsibility still rests with the registrars. So you need to visit your stockbroker and then get the necessary documentation submitted. Whatever it is for e-dividend, everything has to be activated at the registrar's end. So it's your stockbroker, liaise with the stockbroker, who would in turn get it resolved with the various registrars. It's an ongoing discussion on how the process can be made more seamless, and I'm sure that as things evolve, investors will be made to know about it.
Okay, thank you very much, ma'am. And then so we will have one last question, and after that we'll call it a day. Once again, let me remind you, please do not forget to fill the evaluation form so that you can include your email for the presentation. This one says, and I think this one should go to Mr. Bablu. It says, Mr. Babalola, where can we view 5-year dividend for stock? like it was on NSE corporate disclosure.
Where can we visit, do what?
View 5 years dividend for stocks like it was on NSE corporate disclosure.
So, I mean, the question, so if you're looking at 5 years dividend for company, it's expected that even if you get the annual account of that particular company, you will definitely see it there, because you will see them. It's expected that every company is supposed to show you their dividend history and also their capital raise history. But if you also visit our own website, we have, on yearly basis, all the companies that have paid dividend and the class of dividend they paid, whether it is interim, whether it is final. So if you want it for 5 years, all the listed entity, we have a page for it that captures what was paid every year. So all what you need to do is just, year 1, year 2, year 3, year 4, year 5, you're going to get everything that you're looking for. But if you're also looking at specific company, then you can look at that information in their annual account. That is also available on our website. And I think while I answered the question on data, I was also rightly informed by our, I saw something here where they're saying that we now have a mobile app, that you can download, and all these data are available on that mobile app. I'm trying to, so we now have a mobile app. Sorry, just give me a minute, because I saw somebody providing that information now. Sorry, a minute. Oh, Irene, do you want to speak to that? Sorry, can we allow Irene to speak to that?
Okay, let's try to, if Irene is she's willing to come aboard. Madam Irene?
Yes. Okay. Awesome. Hello, Pablo. Hello, everyone. The market data information on a real-time basis on NGX's X mobile app. That is available for everyone to download. You can get it on Apple Store. You can get it on Play Store. So you can even have simulations. You can do everything you need to do yourself as well using that app. I can also get a link to brokers as well. So it's an everything you can do app. Thank you.
Thank you so very much, Madam Irene. Thank you, Mr. Bimbola Babalola, for this, very wonderful session. And to you, Madam Bumi Olarinya, you are very immense today. Thank you so very much. We appreciate your coming through. We thank every other person, including Irene Robinson and Wale, for chipping in too. Thank you very much, ma'am. And to our participants, thank you for attending this webinar. We are glad that a number of persons have learned 1 or 2 things, and we hope that we'll continue to see you in our future trainings and engagement. Again, please do not forget to fill the evaluation form and include your email in the evaluation form. There is a column for that. I have posted it in the chat box. We're going to post it one more time again for everybody to see. And then, yes, that is already in the chat box once again. Thank you for coming. We wish you a lovely afternoon, and we say continue to keep safe and happy investing.